Good afternoon and welcome to the Market Wrap for Monday, the 23rd of February. And look, today the Aussie market did start on a positive note, but it wasn't for long because we managed to slip into negative territory as the day went on. And that means we ended the session lower by around 0.2%, finishing at 9,026 points. This is as investors digested Trump's announcement over the weekend of 15% global tariffs after the Supreme Court overturned his Liberation Day tariffs, deeming them illegal. On top of that, it was another big day of profit reporting season, which created big share price swings in both directions. Now, looking across the different sectors, you can see most of them actually fell today. We saw tech being hit the hardest. It was down 4.5% back to a 2-year low. The financial sector was away, down 1.2%. Healthcare fell 2.4%. Consumer discretionary down by almost 2%. But what helped was the materials sector, which gained around 1.5%. That was largely driven by the gold miners, and that really helped to offset what could have been some steeper losses for the broader market today. Now, there was plenty of company news around, of course, with reporting season. Let's take a look at just a few of the results. We saw plumbing company Reece end as today's top performer. It was up close to 14% after beating market expectations for its first half results, particularly thanks to stronger market margins in its Australia and New Zealand business. So while on the surface its results didn't look that good, with profit down 20% due to expansion costs and a soft housing market which continued to impact demand, and that left sales flat on a like-for-like basis, it seems investors instead focused on the growth rather than that dip in profit. So a positive outcome for its share price today. Guzman rebounded from its 14% drop on Friday on the back of underwhelming sales growth numbers, managing to gain around 8.5% today despite receiving several target price cuts. But of course, as I mentioned, coming back from that steep decline on Friday. Furniture retailer Adairs saw its share price lift 10.5% despite posting a 34% drop in half-year profit and an overall mixed performance. But investors seem to focus on positive momentum in the first 7 weeks of the second half, with group sales up 6.4%. Commentary said that the group is well positioned to build on the sales and margin momentum from quarter two and expects sales, margin and underlying EBIT growth in the second half of FY26. And of course, gold miners had a good session, tracking the roughly 2% lift in gold prices amid the uncertainty brought on by President Trump's fresh tariff announcements over the weekend, with 5 of the 10 top performers today being gold miners. We also saw the gold subsector lifting by over 4%. Now, on the losers list, and this is a company that actually dragged in the tech space, was cloud computing giant Megaport. So it actually extended Friday's hefty losses after reporting an underlying net loss of $3.3 million. That's despite posting record revenue and earnings, and that was due to costs of completing 2 acquisitions, one being the acquisition of Latitude. It also received a couple of target price cuts today, which certainly didn't help its share price, which was down close to 18%. Diversified mining group Perenti dropped after cutting its full-year guidance. Data3 fell after posting a decline in gross margin and profit in its software solution business, and some higher than expected costs as well. And that was despite overall first half net profit coming in ahead of expectations. So you can see investors are honing in on certain details within those results and reacting to that, and that's impacting its share price for the day. And Lendlease hit a near 4-decade low after swinging to a half-year loss, hurt by investment property revaluations and impairments in what the company called a transitional year. So Lendlease shares were down around the 7% mark today. Now, the Aussie dollar is largely flat, sitting at 70.7 US cents, sitting slightly weaker against the euro and the Japanese yen. Now, something that could have played a part in our market falling today is US futures, which are pointing to a softer start when the US kicks off trade tonight for their first session of the week. So the Dow is pointing down by 0.6%, the S&P 500 down 0.7%, and the Nasdaq is down closer to 1% at this stage, with still several hours to go before the trade kicks off. Now, tonight in the US, we also have factory orders and manufacturing activity updates being released. Tomorrow, it's going to be another big day of reporting season here locally. We have Woodside, which is likely going to be the large one tomorrow. It's of course, the energy giant, but we have plenty of other companies handing down their results, including the likes of City Chic, Viva Energy, ARB, Monadelphous, Nine, Center, Nanosonics, and a whole raft of other companies. So we'll be, of course, covering that tomorrow in our daily podcast, the CommSec Market Update. We also have Amcor, Challenger, and AGL trading ex-dividend, and we have Transurban paying out its dividend. On that note, see you again tomorrow.